There's good news for home buyers across Sydney tonight as property prices take a dive in our southwest. But economists warn the buyers' boom won't last long, with the big four banks now predicting a rate cut this month, renewing housing demand.
This is all about lifestyle and home and family.
All the wonderful things that the southwest region of Sydney has to offer.
The holiday's over, the bidders back into it.
Another 5?
10.
I'm taking you to all my auctions.
With jewels in the driveway for this 5-bedder in Lanier
And your number?
and 4 bedrooms in Hinchinbrook.
And 25 here. 30 now I've got. 90. 180.
Both
Sold.
Sold.
above expectations.
We always had a goal and we knew how much we needed to spend. We stuck with that.
After a market slowing since November, with prices down almost 2% in the southwest, about $19,000 off the median, falls too around the CBD, Blacktown and the east, down around 1% for the inner southwest, North Shore and Shire, only the outer west and mountains seeing a slight rise.
We know that affordability challenges are front and centre. Of course, the sustained higher interest rate environment also weighing.
At the back end of last year, there was a bit of let's wait and see mentality where I feel like everyone's gone away on holidays, come back and say, you know what, let's stop looking and start living.
Economists say the property market is now set for a shake-up after more than a year of interest rates being on hold. A rate cut could be just 17 days away.
CoreLogic data shows property prices remained steady across the country last month. Many cities are experiencing a slowdown or declining values, making it easier for first home buyers to enter the market. Rachel Clayton reports.
In the heart of the nation's most expensive city, an apartment is ready to sell. But no one is willing to pay the price the owner wants.
What we've opted to do is to continue the negotiations, but privately and behind closed doors.
In the last day or two, it's just fizzled, so I don't know what's happened.
It reflects a cooling housing market across much of the country.
There's a clear trend of slowing in the pace of growth. Overall, a gradual transition to more of a buyer's market with fewer sales and demonstrated demand, and stock levels starting 2025 higher than where they were at the beginning of last year.
Prices remained steady in January, but were still up 4.3% for the year. The monthly gains were driven by Adelaide, Darwin, Perth, the regions and Brisbane. But values in Hobart were flat and they went backwards in Sydney, Canberra and Melbourne.
In a place like Melbourne at the moment, lots available at that sub $750,000 price point. There's a lot of stock out there. Interest rates are high, but this year we are looking at seeing maybe 3 or 4 rate cuts. So home loans will also get cheaper to pay off.
A reduction in the cash rate would probably massively boost consumer confidence that it is a good time to buy, and it would increase borrowing capacity, which would put upward pressure on values.
The slowdown in prices has helped first home buyer Sophie Bukers get on the property ladder.
We've been living in my parents' flat for about 4 or 5 years.
The 25-year-old and her husband had help from their parents and grandparents to buy an apartment in Sydney's northern beaches.
It definitely allowed us to get into the location that we really wanted, which bumped it up from a 1-bedder to a 2-bedder sort of price range for sure.
According to a rolling survey of 52,000 Australians by Digital Finance Analytics, more than 60% of first home buyers relied on money from their family in 2024. 80% received cash from their parents and 12% from their grandparents. They were given an average of $112,000 to buy their first home.
Some experts say the Bank of Mum and Dad has become one of the major factors underpinning house price growth, giving the current generation of new buyers a springboard into the market.
The fact is that if you don't have those sorts of connections in your family, it's very hard to get into the market.
The Bank of Mum and Dad dynamic in Australia is strong and getting stronger. It's a new reality. It's certainly part of the landscape now, and it's not going away.
$3.5 trillion is set to be handed down from older to younger generations in the next decade, according to NAB.
I think in this economy and situation, if family are able to help out, that will definitely be a given for my generation and probably going forward as well.
Keeping wealth in the family.